Hello and welcome to Stocks Advisor. Today we'll talk about Orbital Energy Group Incorporated, traded at Nasdaq, ticker name OEG. Well, OEG is that rare case when actually both the technical pattern but also news both worked in the same way that caused really great growth here today. You see we finished at plus 113.80% after hours trading, almost plus 2%, with a lot of volatility. Of course, enormous volume being traded today. You can see more than 233 millions of shares traded. Incredible. And for a company with a market capitalization only 394 millions, this is of course well expected growth, such a big growth, and overall the volatility for the company is also of course huge. You can see the bigger scale. It was volatiling from December, from the area of, from actually mid-November previous year, from the area about 1 and then going all the way to 11, and before to mid of 2020 it was even lower. So incredible growth. Then of course followed by very, let's say, a long-term clear correction pattern. So if we magnify a little bit we can see it here. So what was interesting here, as I said, it's a nice combination of both breakage of the trend and also the news, because if you look here what was happening recent days, after descending a couple of months in this dark gray channel, we finally yesterday broke it upwards, and it was clear indication that we should grow further, so everyone was very keen to buy more. But then news came and it just skyrocketed the price. You can see it even didn't follow the opening just a little bit and then went all the way high. But now, and this is important to understand what is happening, we finished at the level which is actually the bottom part of the very high growth of February, and after hours we're trading 775, which is actually a little bit let's say higher, but it's just within, let's say, the candle of today trade. So we are just sitting in this very tiny line, and the question is, are we going to pierce this enormous resist level that is formed by February, which is with the maximum to 968, a little bit higher maybe, but still it's quite multi levels resist, or are we going to decline? What might be happening by opening tomorrow? We might do a big spike. So for those who are in the position, it would be maybe wise to sell, take the profit of the heights. But then what is expected is to form a cup and handle maybe, or actually V shape. So we will know later about the second part of it, but most probably it will be a skewed V shape or a W shape or just a V shape or whatever. But it means that first we might have a decline, because we had this already before. You can see in November similar action, grow, and then kind of cup and handle a bit skewed, and then flag and grow, and then flag and decline. So this could be similar situation. So therefore I would, if we already in position, sell at the highest price possible, maybe closer to the 9, let's say, but then to wait to formation of the U shape at the first instance. And then speaking of where and how to buy, of course now we can talk about how it would be the easiest, the safest way, if any, to trade. Because with this, a lot of volume traded and still not being higher than the previous tops, it's a high probability that there will be short attack, and actually the price might dramatically decline. Again, remember the situation taking place by second half of November, and actually similar could repeat. So it's this one here, and was actually happening with these a lot of volatilities many times. You can see also here, etc., etc. So these are possible situations. We need to be prepared, and therefore we need to be buying a little bit lower. So now let's talk where we can buy. Of course, the first moment to buy would be just this level, a little bit lower here, just lower than the opening of today, and then going all the way to this support line, mainly formed by beginning of the year, mid of January, but also reconfirmed many times here. So this would be the first level where you can buy, hoping for a V-shape rebounds. It's still difficult to say if it will be a long-term rebound or short-term, but still it will be quite significant one once it happens. So the profit could be quite high here. We will now talk about it. Let's first write the level. So it will be between 5 and 577. So primary technical to buy here would be between 5 and 577. Let's write it here. And then, of course, you can wait for the V-shape rebounds if it starts from this level and take the profit. Speaking of profit, here it can be really significant. So from 15 to 20% from the money allocated in the position. Of course, it can go even higher, but we usually advise to take the top of max of the profit 20%, then re-enter if needed, because trying to really chase full profit, of course, depends on the chart and on the news. Depends on which position you are, but if you are purely trading only on chart without news, usually 20% is kind of a limit for a day trade, and yeah, you can re-enter later, but overkeeping stock is a bit dangerous because it might expire, and then instead of having profit, you will be actually having loss. So with this being said, this is the first line. Still, of course, the U-shape could be going deeper, so because we don't know where would be the lowest, the bottom of it. It could be, of course, here, if the first level will work, or it could be even lower going, and in that case it might be like this. Of course, then we might go all the way to moving average 200, so this could be the V-shape forming like this, and then we might return to the first channel actually. So if this is going to happen, then we can clearly see here another level forming. So if we would just slightly magnify the pattern, you can see it's just starting from here by beginning of March, but also again by mid of January. In that sense, the action that took place by mid of January is really defining here, and the higher part of this will be just here, also formed by middle of the flag in January, and also the prices actually the prices also taking place in beginning of March. So with this being said, now let's move it a little bit to the left. We can write our second call out. So these would be the levels between 427 and 353. So let's write those. This is the second level, so the second technical level from where we can buy and actually again make the profit on the rebounds on the U-shape or V-shape formation. It's still hard to say if it will be cup and handle formation. Later on we will see it, but for now this is the level. And of course we always need to keep some funds to average down if there is any negativity, which could be news related, company related, global market related, whatsoever. In general we call it negative catalyst. And to mitigate for those, we just need to buy at the lowest principal level available here currently, and this is of course the one that we can see formed at the 251 and a little bit lower here at 183. It's not that we go at all there because actually it's quite low, but it's just that we want to keep some funds to buy there if there is any negative catalyst kicking in. So we want to be very safe and sure that without doing a stop loss, so without going overall negative from this trade experience, we still will finish with a profit. And although it might take a little bit longer time, but this way of trading would be quite safe here. So with this being said, these are 3 levels to buy, and asking how to buy through. It's still a classical trade, although as I said, we need to wait a little bit. And what means the classical trade here, for those who are not first time at our channel, they know it means that we would, let's say, give an opinion to split the money you would like to play here in 5 portions. Then you can buy with 1 portion in the first channel. If the first channel is declined and we go into the second channel or second level, to be more precise, then you can buy with another 2 portions. And if there is any negative catalyst coming in and the price really drops, you can buy with the remaining 2 portions in the third level. This way it will be the best optimization for profit versus loss, and without taking stop loss strategy, so without exiting with final loss, you will be actually able to buy more the lower level and still exit with a profit from 10 to 15% from the money allocated in this position. This way of trading is really optimized for profit versus loss and trading with daily candles, so you don't need to watch 15 minutes or actually daily behavior levels, and you don't need to take losses by, let's say, stop loss things, because you know where it might go, the principal levels, you will just buy there, and then on the bounce you will return your money. So if you like this style of trading, Don't forget to subscribe to our channel, press the bell button, then you will see more of our opinion videos. Of course, it's up to you to choose this style of trading or not, but we can share with you how we trade at our brokerage accounts, the strategy that we use. So if you like it, you would like to be informed about it, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.